There's a new CEPR research policy network kicking off on sustainable finance. But what does that mean? What can it do? And how big an effect can it have? Hello, Dirk. Welcome.
Hello, Tim. Nice to see you again.
Now, Dirk, you wrote the book on sustainable finance. You literally wrote the book on sustainable finance, Principles of Sustainable Finance. That's your textbook.
Yeah.
Now, the obvious question of where to begin on this is, what is sustainable finance?
Yeah, that journey and the book really starts with sustainability. What are the sustainability challenges coming from the Sustainable Development Goals? And only after we discuss that in the first chapter, the next question is how can finance contribute to it? So finance is a means to help out on the sustainability challenges.
And how does it? What are the various ways in which that would happen?
Yeah, and the interesting insight we got from the book is that while most people start from a risk perspective looking at sustainability, and we got this week the IPCC report again, the risk, we approach it as an opportunity because the role of finance is allocation. That's the primary role of finance. So allocate as a bank or as an investor your funds to sustainable companies and countries, and allocate away from unsustainable. That's the big question. And finance is very powerful as the big allocator in the economy.
Now, on that subject, I was talking to a large bank recently about the lending that they're doing, and they were saying to me that really all their lending now has a sustainable dimension to it, because the risk of lending to a counterparty that had nothing to say about their level of sustainability or their plans for sustainability had gone way up. Is this evidence that finance markets are adjusting and incorporating sustainability?
Yeah, so the good news is indeed that finance practice banks and investors, I would even say they are ahead of academia, so they are working a lot on it. However, we always have to be critical as academics. How deep are these stories going? And especially with banks, I work with a lot of banks. Even if the account manager is asking the question, the real key issue is if we move the lending proposal to the risk department, the credit risk committee, are they really putting it into the models? And that's currently the big hurdle for the risk people to understand and really integrate it. And the next step will then be for the regulator to put it in the Basel models. That's going to come. And our RPN, our Research and Policy Network on Sustainable Finance, is going to contribute to that. But that's the next step, from the stories to really integrate it in your risk models. That's the big challenge for banks and regulators.
On a secondary level as well, are we seeing evidence that stock prices are beginning to incorporate sustainability?
That's going stepwise. My favorite is Andrew Lowe, because we all are trained as finance and economists by efficient markets. Andrew Lowe says, no, we have adaptive markets as we learn. Given that we know more about climate after Paris, and my great colleague Patrick Bolton, who's also on the steering committee, shows that the carbon premium is getting into stock prices, so that's happening. And Paris indeed increased it. But for example, new topics like biodiversity, water scarcity, that's not yet fully in the stock prices. So I would say the markets are adaptive and running a little bit behind, as most analysts are conservative. So after they hear many stories about Paris, they will start to look at it. So they are not the front runners in this area, I would say.
A few years ago as well, one of the complaints about large-scale institutional investors was that they preferred to be very passive. Are we now seeing more evidence of activist investors at this scale forcing companies to improve their records on sustainability?
Yeah, and that's really interesting to see. Well, most academic research is on the so-called ESG ratings. But more and more it is clear that the quality of these ratings is very poor. The correlation between the different rating providers is 0.6. The ratings are changing day by day. So to me, this is about fundamental investing. Not just taking a rating and then run your portfolio, which is also common in academic research. So it is really about looking what a company is really doing or a country. I just finished a paper with a PhD student on SDGs and government bonds. Really look into the company, what's happening, and then draw your conclusion. And based on the information, and now it gets interesting, you also do your engagement. And that we have seen that now is a big thing. Exxon got one or two board members forced upon them by their investors. The stockholder, the votes at the annual meetings at all the oil companies by follow this. So engagement, talking to the companies, trying to make them move faster. That's the big thing which the institutional investors are doing, and you can only do it by fundamental research. You cannot do it by just following a rating. So I would say we become business economists again. So we start to analyze the company rather than some financial data and some ratings. So we go back to what we learned in our first year at school, at university. We start to look at companies as real companies rather than as stocks.
Well, that brings up the point that you actually just made. We talk about sustainability as if it's an easily measurable quantity, but the quality of ratings has been poor and they have been disputed. Is there much progress that we can make on this, that you can make on this in the RPN?
Yeah, there things are now happening fast because the need to get there is big, and the IPCC report made it also clear. For example, one of the first webinars, the conference we will organize is on carbon accounting. So we are getting to the detail to measure the impact, and the IFRS, the International Financial Reporting Standards, is now working on setting standards for social and environmental, that's combined with sustainability information. So we are deep diving into getting the information, and then we hope to make progress in doing it in a harmonized way. Otherwise you cannot compare information between companies. And that's why this Research and Policy Network can really combine what's happening at the IFRS, the policymakers, and what's happening in the research community. So that's the exciting thing, that we as academics and policymakers can exchange views and help each other. So the reporting on impact, on sustainability is that's what the big thing we are going to see the coming years.
Well, you have 3 years ahead of you in the RPN, so that's a lot of deep diving that you got the chance to do. Where do you think you'll be able to make the biggest contribution?
I think the biggest one, I hope, and that's the most difficult one, is the mindset shift. As I said in our book, we start with the sustainability challenges, not because if you currently open a finance textbook, you read the objective of the company, and it's profit making. And as long as we stick to that idea, and that of course it is profitable to look at the new societal trends, so we do our thing, then we make piecemeal progress. We need to recognize that the social and environmental factors are important in itself. And then we need to balance that with profit, because we are business people. We know if you're not profitable, you don't survive as a company. So how to balance profit and impact. And that's what I hope, that's what we hope. We have a steering committee with Patrick Bolton, Stefan Reichelstein and Alec Edmonds. That's what we really hope to achieve, that this mindset change, we get there, and then we stop talking about sustainable finance, because finance has adopted these factors and internalized. And then we go back to normal finance and we are mainstream. That's our main aim. So not only the methods, but the mindset.
Will you be able to loop into your RPN banks and central banks? When we spoke before about sustainable finance, it was about sustainability and the interaction with monetary policy. So are things like this within your remit?
Oh yes, we have Isabel Snabel from the European Central Bank on our RPN. We have other central banks joining, and we will work both on banking and investment issues. And don't forget, 2/3 of finance in Europe is through banks. Well, as academics, we always look at equities, and they are important. Bonds and bank lending are important channels to influence. So we want to look at the whole remit.
Anyone who wants to get involved in this, Dirk, what sort of contributions are you looking for? Are they welcome to join in?
Yeah, yeah. So we have the group of about 30 people from academia and from the policymakers. We don't know it, but the European Investment Bank is the biggest development bank in the world, bigger than the World Bank. And the European Investment Bank has now become the climate bank of Europe. They're involved the European Commission, the EBRD, so several policymakers, the front-runner academics in this field. It's really exciting, both from asset pricing, from reporting, but also like on corporate finance. So I'm really also happy with Alex Edmonds, who has written this excellent book, Grow the Pie, showing how from sustainability you can make a profitable business case. So both from the academic and the policy circle, we have everything in. And then we have 2 items on the program already. The first one is carbon accounting. So how do you do it? How do we exactly account for the emissions? How do you do it across the supply chain? And we come to the insight that it's not sufficient to think only in carbon intensity, carbon divided by your sales, but that we basically have a carbon budget, which is running down, so that we first need exact accounting, and then to allocate what you can use and how we are going to run it down. So that's really technical issue. Important, because if you don't have the right numbers, you cannot do policy making. And the second thing is we want to organize on stakeholder versus shareholder thinking. That's a big debate, and that's a bit going back to the mindset issue I discussed earlier. That's also where we are planning. But we hope to get contributions from our members, from the policy side, from the academic side, like the monetary policy. I'm sure we are going to talk about it. That's now in the ECB review. So there are many things coming up.
Well, the big news recently has been the latest IPCC report, and that was even more alarming than I think many people expected. Does this show that the time available to change this mindset, as you say, is less than we thought? Exactly.
And basically, for the insiders, this was no news. Because if you're tracking the papers in the science literature, that we have this tipping point, Greenland, Antarctica, melting faster than we think, the permafrost in Canada and Siberia, the rain patterns we have experienced in Europe, wildfires. And the big message is, we as finance people have to listen better to science. And I think the report is now for the first time clear. The impact of human action is proven. So we have to listen to connect more to science. I'm doing it personally. For example, I'm now working on biodiversity, and it's very exciting to learn which are non-linear risks, so it's very difficult to measure. We have to learn more to team up with science, and then make speed. Just do it, rather than, because time is ticking away. And I think the biggest reminder for all of us is, if tomorrow the carbon price will be double, solar and wind will be far cheaper than oil. So if we know that next year we increase the carbon price, then we know that the oil companies have big problems. And then today's price of the refineries are already zero. even negative because you have to decommission them. So if things are moving ahead, then we get the concept of stranded assets, and the stranded assets happen today, not when it happens, because if we know it happens in the future, you already put it in today's price. And I think that insight can help, once people see it like that, can help to speed things up. And then finance is great, because finance, in principle, should look at the future, not at the past. That's why we need this fundamental research, rather than just tracking ratings from the past.
Well, Dirk, good luck with the RPN. It's very urgent. It's very important as well. So good luck making speed with that.
Yeah, thanks a lot, Tim. And I joined the whole readership to come to our meetings and seminars.
Well, you heard what he says. Everyone, come along to the meetings.
Yeah.
Keep checking in on the activities of the Sustainable Finance RPN. The link is on the screen now. And you might also want to check out Dirk's book. It's called Principles of Sustainable Finance, and it's from Oxford University Press.